Okay, good afternoon, everybody. Welcome to the weekly Take on the Market. Today is October 14th. It is Friday around 1:30 my time, Pacific time. So the market's been closed for about a half hour. I'm your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. Our disclaimer: I'm not licensed. Nobody that I know of at IBD is licensed. We don't make buy, sell, hold recommendations. Try to stay in our circle of competence, research, education. Hopefully you guys learn how to do this on your own. Okay, so we'll talk about the market indices. Another crazy week. The market never seems to disappoint. Then we will look at a few charts that I found along the way. There'll be the usual same bat time, same bat channel. Just the market, always seems to provide some kind of feedback. Every week I think, gosh, what am I going to talk about next week? And then the market does something crazy and there's, plenty to talk about. So indices, industry groups, not much has changed there. Stocks to watch, and then the quote of the week. So let's pull up the Mark Smith chart. And you should see the NASDAQ. I don't know what the volume was like today. This price action should be pretty spot on. Volume might be a little bit off because of, it takes a while for the volume to catch up. But, yesterday we had quite a reversal on the CPI number, and it was a little bit of sell the rumor, buy the news. I don't think the street was totally surprised that the CPI number was high. I think it came in line. Did it come in line with what they thought, 8.3 or something? The market, flushed lower, and then here's what happened. So gaps down, and in the futures market, it was like boom, like this huge bar straight down, and then they caught it, and then he had a huge rally, like a U-turn rally, which I actually thought was a good sign. I felt like maybe the market is a bit washed out, and that you could get, even at worst, some kind of bear market counter trend rally. I even went long some names, during that time as the market started to let me go back to like a 10-minute or something. So as the market started to do this, I actually started to get long a little bit. Because sentiment is really, really bad. Like all the sentiment gauges are off the charts, historic, but their secondary indicators, they just don't seem to be working this year. And I've mentioned that a few times. It worked for half a minute. As you can see, the market went up. Market tried to go higher this morning. It looked like you could get a little, and then fell out of bed. Now we haven't taken out these lows, but today, Friday, was just not a good day. So NASDAQ, that's just kind of a nasty bar, and it's a Friday. When it closes bad like that on a Friday, no thank you. I just get to the sidelines as far as being long. I have a single long, it might be a 2 to 3% position, and then I have a single short, which is a pretty heavy position. But it's just difficult to navigate the markets right here. The volatility in one of the charts that I'll pull up later is it's just too much volatility. So you can't really protect yourself. You're just going to constantly be getting stopped if you're trying to play it. Like I mentioned, IB Live this morning. It's in my nature. I like the markets. I thought we could get some kind of rally, and if I think the market's going up, I'm going to buy it. I'm not going to go crazy because I still believe and am fairly certain we're in a bear market, and it's just unlikely, based on history, for the bear market just to end in one day. That's not how it usually ends. Most of them kind of end with a whimper. They'll make a low. You never know that's the low. I guess if it crashed, like 87 crashed, then, the low was the next day. Something like that, you could maybe get a single low, but usually it takes you get some sideways action, and the volatility needs to contract out of the market. S&P, not great either. way below all the moving averages. When in doubt, it's a bear market, right? Like I mentioned, the turkey story two or 3 weeks ago, it's a bear market. So when I went long yesterday, I know that I'm going long within the context of a bear market. I better have a plan for that. And, this morning I was, anything I bought this yesterday that I didn't sell on the strong open, and I end up having to push it out as the day went along because the tape was so bad. The Russell has not made a new low for whatever that's worth. There's the IWM. So you can see it has it. I think it missed right there. Or no, under 162.5. Yeah, I undercut just a little bit on the CPI numbers, but I don't know. I'm just grasping at straws here for something bullish. The positive divergence possibly. Bond market is another new low today in the TLT. I don't think this is probably updated in real time. Let's see. If that was a stock, you would not want to be short it. That looks like something going higher. So if that's going higher, that means yields are going higher. And the bond, this has been the straw that stirs the drink this year, has been the bond market. It's just been a real caveat, real boulder. It's like pushing a boulder up a hill for the stock market. So that's been the problem. Okay, so let's so here's some good news. Hopefully, we are in the best kind of period for stock market gains. October is usually when the market will make a low historically in the type of market we're in. You look back on his history, it just seems to be kind of a magnet for a low. I don't know if that's going to be the case this year, but it's setting up as a possibility. Today's the 14th, we're halfway through October. But the two best months, well, I guess August is a little bit better than November and December, but we're getting into that cycle where you get November, you get December, and then I don't know why January is missing on this chart. So strange. But you get into the next year and see February, March, April are usually strong months. Again, it's all kind of stuff I think about, but I won't trade based on stuff like this. But maybe if there's any kind of hope for any kind of rally, it's going to have to occur late this year. And either way, the markets are going to be down for the year. There's no way that it's going to make up all those gains. I think I don't know if I have charts on it, but I heard that this is the worst year ever so far through this time period when you combine, a balanced portfolio, stocks, bonds. I finally have starting to hear it from some friends about their 401k. Even one of my friends he's in the business, but he's in finance, but he's not a trader or investor, so to speak. But he goes, boy, I thought, as he's getting closer to retirement, he said, oh, I thought I was doing the right thing going to bonds. I was being conservative. And he's got hit really hard in his 401k this year. So there's been no place to hide, as we've heard a few times. Hedge funds, so far, not a surprise. There have been some hedge funds, like I talked about Platts hedge fund, I think Bluecrest last week, have done okay, but this is a good graph. It looks like roughly 18-20% are up this year. 0 to 10%, you're doing great if you're down anywhere from 10% to or to 0 in that window, especially if you're managing big money. I think you could really hang your hat on that. You've got another 20% or so. So almost half have done good to okay this year, but more than half are down 10% or more. And when you get into a hedge fund and the overhead and The high water mark is how you get paid. I would imagine most of you know what a high water mark is, but it's how you get a performance fee. If you give me 100,000 and I turn it into 200,000, the typical 20%, I get 20% of that 100,000 you made. So you now have 180, and I get, as the manager, or the company gets that 20,000. But now I have a high watermark. I've got to go above that 180 to get paid again. I can't go down to 150, push it to 180, and then collect from one. Say, oh, I went from, let's say I lost 180 to 150 one year. Go from 150 to 180. I don't get to collect on that 30,000 that I made you another 20% because I haven't. You're not in the money yet. You only you have to pay on gains one time. If that makes sense. So if you get too far below that high watermark, 20, 25, 30%, a lot of them they close up shop. It's just you're looking at too long a window to get into where they can collect a bonus. Now, some of them have management fees, but they're usually small, anywhere from 0 to 2%. Even 2% is probably pretty high nowadays. Feel like management fees have come down. So this is a lot of money. As we get near the end of the year, there's going to be some hedge funds that are probably going to be closing up. And if you get a lot of big AUM, $10 billion hedge funds down 30, 35, 40%, 20 billion, 50 billion, they're out of business. And so they've got to liquidate. And maybe that's what's going on. It just feels like the smart money, the big money has stepped away, waiting for some type of flush before they step in. There's just no liquidity in the market. The market has these pockets, these air pockets where, like this morning, it was fine. It actually was higher early in the morning, and then it just air pocketed. It's just like down 25, 30 handles. A handle is a point in the S&P futures, but just like boom, like that, and then it's just a grind lower the rest of the day. I don't know. What's fast forward 3-6 weeks from now, maybe we'll know what was going on. But it feels like the big money has stepped away. There's no liquidity, and then there's half the big money stepped away, and the other half they need out. And it's an owl market, right? Who am I going to sell to? If I'm XYZ hedge fund, I've got to get out of $10 billion worth of Microsoft and Google and PayPal and Shopify and Tesla. Who's out there to take that off my hands? I don't know. It's a good question to think about. Interest rates. The market is starting, and you're seeing it with commentary from the Fed finally, and European central banks. I think everybody is trying to prepare the world for a recession. Now, the market's been anticipating that for a number of months. So a recession, which should not surprise anybody. Here's credit card interest, the highest since 1994. And credit card interest is already ridiculously high anyways. Look at that. It's never been lower than 12%. So from 16 to 12 range bound, and now you're pushing above 18. I talked a little bit about the size of these companies. The one area that I think if we ever get out of this malaise we're in, I think you can possibly go to energy and infrastructure, and maybe it becomes a market of building things versus software and stuff like that. I prefer it to be software and stuff like that. The high margin businesses, they move more. They're easier to identify, not easy, but easier to identify as far as leadership. And you see, I look back 5 years ago with Coupa and Team and Salesforce on the big end, but there's just all these great companies with these charts and these earnings and sales and sponsorship. And those are much better go-to names. But The market cap of Apple is larger than the S&P 1500 energy index. These alligator jaws are going to close. I'm certain of it. I don't know if they're going to close because Apple comes down or energy goes up or a combination thereof. But it's just gone on for too long. And I don't know. We'll see. I could be wrong. I listened to Charles Harris on the podcast, on IBD's podcast yesterday. And, he talked about, I don't want to put words in his mouth. He didn't actually use the word hate, but he's not a big fan of, energy stocks, of these types of stocks. He's looking for the world to move away from these things. I am too. And in a perfect world, in a magical world, we wouldn't need this stuff. But in the reality that we live in, we need it. And it's been underinvested for a long, long time because the world, the leadership is in a hurry to get away from this stuff. So these are things I like to think about, again, on a macro view, but on a micro view, I don't know. I do see relative strength in like COP and EOG and VAL, which is an offshore driller. Some of the shippers, I'll pull up some of those, like Sting, STNG, and TNK are acting really good. They are really strong. So I think the market is sending the message that I see as well. I want both of those to be aligned. Here's the decreases in the Swiss National Bank's portfolio. Remember I talked about how large their portfolio is? And I think I exaggerated how much Tesla they had. I thought they had a much larger percentage of their portfolio in Tesla. But the Apple number is gigantic. Google is 4% when you combine both of them. Facebook is 1%. Amazon is almost 3%. Again, it's who are they going to sell to? I just don't know. The hedge funds are all loaded up in these names as well. So, and it worked great on the way up, and it's become a bit of a roach motel on the way down. Here's the chart I was talking about in volatility, and I apologize, I forgot to bespoke. I want to give credit where credit's due. That is where I got this chart. I believe, but the number of days that the S&P is up is just collapsing. Look at it. It's like, it's not quite historic, like 82, 74, and 70, and the 03 bottom, but we're pushing down, and maybe another leg down in the market, if that's what we're going through, could push this down to a record. I think there's another chart that I wish I had, or the number of days that the S&P has been down 1% is a record as well for the year. I hope I'm quoting that one right. Maybe I'll try to find that chart for next week, but there's just a lot. And the VIX, which is a measure of volatility, allegedly, it's in the name, it's not that high. I think today it was it's still in the mid 30s. The COVID low, it was above 80. Well, we'll pull up the chart here in a second. It's been a trick. This market has been really tricky. So if you've used sentiment, it's tricked you into thinking the market was going to rally when it didn't, just kept getting worse. If you've been using the VIX, I guess maybe if you've been using the VIX to look for a spike to cover shorts, you've done okay. But it's just there just hasn't been that fear, that capitulation so far. All right, so let's pull up. Let me pull up the VIX, and then we'll pull up the industry groups. And I'm going to turn my camera off because I know sometimes I think you guys can see the charts better. So if this is right, it was barely up today. And today was not a good day price action wise. So it's just very strange. Here's the COVID high, 85. Here's the, this is, so what do they call that? Where was the Christmas Day? This is it. I don't remember why it spiked like this. That's strange in February of 2018, but here's the kind of the Powell pivot that people were hoping for. This is the mother of all spikes, at least in the last few years. Let's go to the monthly. And it goes back to the 90s. So even in 2000, you had, 45 was kind of a lid. And then, the great financial crisis, 89. So that's a massive spike. And then the COVID crisis was 85. So it's basically range bound, high end of the range for sure, but range bound. I don't know. I don't know what to make of that. It's got me perplexed. I know I wanted to pull up before we get into industry groups. Charles mentioned the sentiment, the bull bear. Now, we don't have a list of this, and this didn't used to be in Market Smith, but now it is. We're getting the feed from William O'Neill, and the number 0, bear, is a chart of the investment advisors, bearish. So here's a monthly, and here's 1994. That was a great period of the market. Here's 2008. Pretty bearish. Now, the market didn't bottom in October 2008. That was around the Lehman bankruptcy, but you could see they were getting bearish, but the market continued to go lower. So right there, it continued to go lower. And then a few, okay spikes here, and then the COVID spiked up very briefly. So a lot like the VIX, I mean, it's high end of the range, but it's not the extreme from a historical standpoint. It's been higher a few times, but we're pushing the envelope to the highs. This is one of the things for sentiment. If we go the other way, 0 BULL, that's the bullish. That's the advisors that are bullish. So in 93, very few were bullish. I'm sorry, 94, great time. I mean, I'll open my own first account like 1995. The market was like straight up from there. Here's the crisis, October, right? And very few people bullish. This is interesting. 2015 and 2016. On the surface, it didn't seem like much of a bear market, but that was a pretty good bear market. I remember Facebook. I was trying to hold Facebook at that time and got knocked out of the box. So this one's a little bit worse. The number is 25, so it's down here. But these were mentioned on the podcast with Charles, so you can pull them up at least now. It's weird. I didn't know they were in there, and then one day they were added to. So it's 0 bull is going to be the percentage of bull advisors, 0 bear, and you can see this crossover on investors.com. Under the psych indicators, they have a chart where they'll mark if the bulls or the bears cross above the bulls. In other words, more bears than bulls, usually from a contrarian standpoint, is a potential turning point. All right, so industry groups. Oil and gas, energy, solar, Bank Southeast. I noticed that David Sato Chung mentioned a bank today on IBD Live. So that's interesting, really moving up the food chain, 95, 54, 3. Oil and gas transport, biotech, hanging in there, oil and gas. So there's not a whole lot has changed there, and not a surprise. I guess from a negative standpoint, where is solar? Still second, which is a little surprising to me that it's still second. But if everything's going down and Enphase and First Solar have kind of given up a little bit of the gains, relative to everything else, they're hanging in there. All right, so stocks to watch. And what is there to watch? There isn't hardly anything. So let's pull up the usual suspects. Let's start with Apple. Let's go to the daily. It's losing some relative strength. I remember in here, it had RS line blue dot and was hanging in there pretty good. Let's look at the weekly. You haven't undercut the lows. If you're a really long-term holder and you have a lot of patience and you've owned this for a long time, it's Apple. It's how much can it correct? I guess for my taste, it can correct a lot, too much, possibly. But I don't hold them that long, like long term. Like if you bought Apple down here, so it's hanging in there okay. Google, it's not a lot there, right? It's making, basically making new lows. Microsoft making new lows. Amazon still above all these, but that just doesn't look good either as well, right? So most of the leadership, there isn't any leadership, which is why there's kind of no place to go, which is, one of the caveats of it, like having a follow through day and the market changing to the upside potential, is stocks to buy. We need merchandise. It's both a bug and a feature of the CanSlim system. It's hard to quantify. So we had a follow through day on Wednesday of next week. Okay, great. You have a follow through day. What does that mean? Well, there needs to be merchandise to buy. There needs to be stuff to buy. You can't have a follow through day and just go buy Amazon the way it looks here. That's not how it works historically. It would be, follow through day like that, coming out of a base, or Shopify follow through day like that, or PayPal follow through day, right? NVIDIA. See how much different these charts look? Here, follow through day, coupled with handle. So different. Team in 2020. And I've kind of cherry picked a good one, but I just want you to get an idea. Look at that. Huge base, corrects, follow through day. C Limited. I remember buying C Limited coming out of this base and trying to hold it and couldn't because the market got so bad, but then buying it back here as it makes new high. This wasn't a base, not long enough, or maybe a little too, not quite cuppish enough, but good enough for me. If we had a follow through day tomorrow, or I should say next week, does C Limited look anything like this? Right? Not a chance. It might rally, but it's not going anywhere. There's just too much overhead. So we need merchandise, and that's what we're waiting for. So we need some kind of comment, and that's why the merchandise will show up if the market just goes sideways and fails to make a new low over a number of months, because then the best merchandise will go sideways to up and round out those potential bases. So we're just not in any hurry at this point using our system. Let's look at everybody's favorite Tesla. Making new lows just doesn't look good. Looks like it's going lower to me. This was the best stock of the bull market. And if the bull market is over, which everybody's, I think can pretty much agree the bull market's over, based on history, the best stocks go down, which is why I've been short Tesla for a while, because I just felt like it was going to go down because that's how history works. It's finally starting to comply. So I think it made a new low today. 205 is undercutting these lows. And I had a precedent. If you look at, let me grab my chart. Sometimes we'll build analog precedents, but it reminded me of Apple in 2008. Do you see how Apple broke 43%? It had made a 27-fold move in four and a half years, broke 43%, rallied up, and then rolled over. Had a really bad month right there. The weight of the market was just too much, and ultimately corrected a ton before it righted itself. And maybe that's what Tesla does. That's possible. We're to here. So here's Tesla. And if I did the math right, it was a 26-fold move in 2.5 years. So Apple was 27-fold in 4.5. Tesla was 26-fold in 2.5. Everything happens much faster nowadays for whatever reason. The dissemination of information must be the reason, if I had to pick one. And you can see how it broke 48%. Apple broke 43%, tried to rally, couldn't make a new high, and now undercutting that low, which is what Apple did. So once in a while, that kind of work actually pays off. It's rare, but it happens sometimes. So this doesn't, looks lower, but long in the tooth to the downside. I think, my first short on this was here. At least on this leg, I've tried out Tesla here, and I've tried it there, and I've tried it there. And sometimes you have to go to the well. If you have a thesis, you have a plan, you have something that plays out, you might have to take a few losses along the way. And then boom, when you get it, be a pig, ride it and let it work. As far as stocks that look okay, the long side, TRMD, TNK. Let's look at the weeklies. The weeklies look really good. Look at that. So you get a bounce off the 10-week. TRMD, I do own this one, bounce off the 10-week. STNG, bounce off the 10-week. These look really good. And if the market was better, I probably would be heavier in them and own all three of them. I only own TRMD, and it's a small position, and it's small, like I said, because of the market. It's just really difficult to be positioned. I do think COP is acting really well, but I just, when I see that type of action in the market, like the market should have been higher today, maybe slightly down, I could have lived with, but not down 3%. And I just don't want to be, I know how well these are holding up. They're holding up. And if the market caves, they're going to go down. So I'd rather step aside, see what happens, and then, I can revisit them. But these, they're the only ones with bases. VAL, a couple of handle, RS line, new high. And so that's where the market's voting as far as leadership. If they're not, I would prefer leadership was in, Suave. It's another area, another one that's potential leadership, acting fine. I know it's come off the highs, it's 20% off the highs, but really is acting good. I like this one a lot. If we get into a new bull market, this could potentially be a leader. And I know I haven't done anything with Celsius. Charles mentioned Celsius on the podcast. Not my favorite, but holding up pretty well. I can't argue with that. So there are tiny pockets of strength, but mostly it's been pretty tough. Okay. Quote of the week. Brent Donnelly, he's an author and a trader, or a trader and an author, probably the better way, but he wrote the book called Alpha Trader. Yeah, it's called Alpha Trader. I liked it. I'm not a literary critic, so I like almost all market books. So take that for what it's worth, but I liked it. I thought it was an enjoyable read. And he tweeted this today. Think of everything you do as a series of experiments. Some succeed, some fail. The stakes are almost never as high as they feel. So I experimented with the long side yesterday and it worked for half a minute and then it didn't. And I'm okay with that. It doesn't bother me. I'll move on and try again, or shorting Tesla. You know how many times I've tried to get a stranglehold on that stock. They're all experiments or probes. I want the market to confirm what my thesis is, and it has to. It really has to. The market is smarter than me most of the time. So I want the market to tell me this is what I think can happen, and the market starts doing that. That's when you get really your sweet spot as far as being a trader and being positioned. So it's okay to put on probes, to try things. If you want to try along in a bear market, I don't hate the idea. I know, like, Ed Carson's more patient. He talked on IB Live, like he'll wait for a fall through day. He'll wait for setups. That's fine too. It's perfectly good and it also fits better with his personality. He says he doesn't like to, kind of be in there when, it's, this volatile or whatever. I'm kind of putting words in his mouth, but I don't mind. I don't mind trying it. And for half a minute, I felt like a genius because I had a great day yesterday and then started to have a great day today, but then the bottom fell out. And so I have to, start running the other way. So it was an experiment that, I would probably call it, I don't know. Was it a small success or a small failure? Honestly, I don't even know if I made or lost hardly anything there because I don't like to anchor to whether I'm up or down. I just want to say, I want in, I get in, regardless of whether I'm up or down. And if I want out, I want out, regardless of whether I'm up or down. And that's kind of how I treat it. So experiment with it. Take some shots. If we get a fall today, buy something, look for something that's setting up, and it might not work. That's okay. You move on and you try something else. Okay. Thank you guys. Have a great weekend. Marcus Smith at investors.com. 800-424-9033 is the contact information. Bye everyone.